Good afternoon and welcome to the APW Market Wrap for week ending 24th of December 2021. This is edition number 80. Why do we do it? We do it just to make it very simple for you to get information about the UK property market in the main, and we do cover others as well. But in the UK market, in the main, what's going on, what's happening, what to be aware of, what to watch out for. This week we've surveyed a number of November reports, quarterly reports, the Office of Budget Responsibility, the Zoopla report, Rightmove, the Daily Telegraph, the Guardian, and come up with an overview, a bit of a summary for the year. According to Zoopla, after a busy start of 2022, the market is expected to move back to pre-pandemic conditions, allowing supply pipelines to rebuild. However, demand-supply imbalance will not be fully unwind, and this will be one factor supporting growth of 3% plus next year. So that's what Zoopla is saying about 2022. By the way, if you do enjoy this, please do remember to subscribe and press the like button so we can share the love with more people. Zoopla go on to say strong buyer demand coupled with lower stock volumes has boosted the average house price by £16,000 in the UK in the last 12 months. This represents a 7.1 average increase. Price rises have increased home builders' equity with some 15.7 million homes registering a rise in values of £15,000 or more in 2021. Buyer demand is currently easing in line with seasonal trends, but it's set to build sharply again after Christmas. Rising household equity coupled with movers looking for additional space will underpin activity, delivering new supply and demand in 2022. So that's the overall review. To look into a bit more detail, see what other people are saying about this as well. Average house prices went up by 1% in November, taking the total annual growth to 7.1%. While the rate of price growth is easing from the peak in late summer, strong market conditions throughout the year have put upward pressure on prices. We know these things already. The rise in values registered in the last 12 months is larger than that posted over the previous 2 years combined in nearly every region in the country. Homes in Liverpool went up the most, 10.7%, followed by Manchester at 8.5%, Nottingham by 8.1%. And there's interesting other pieces of information around that, in that rental values have gone up most in Nottingham. I think they're up by 9% for the year. They've actually fallen. If you looked at the Aldermore report that was out last week, Manchester used to be the top place in the UK to buy buy-to-let. Highest yield, 33% of the market is currently rented. And the problem is that because there's so much being rented and a lot of people have moved out, it means rents have dropped. So Manchester may have gone up by 8.5% in value, but the rents are actually falling there at the moment. Nottingham, because of the e-commerce boom that's going on in the East and West Midlands, has gone up by 8.1% and rents have gone up by 9%. So that's fantastic. Liverpool, it's a very big market, Liverpool, and it's very difficult to just quantify what rents are doing there. So I'm not going to even get into it. Across the UK, the local authority registering the highest rate of growth in any is Carmarthenshire in Wales, which went up by 13.2%. This is basically down to the appeal of more rural and coastal locations being in demand during the pandemic. In addition, it is coming from a very low starting point. So, you're looking at London, it's £500,000 to buy a flat, and it goes up by 10%, that's quite a lot of money. If you're looking at £50,000 for a house and it goes up by 10%, that's different, and that's where we are with Carmarthenshire. 15.7 million homes registered a rise of £15,000 or more. We're approaching the post-Christmas bounce. Levels of buyer demand and sales activity, new listings have slowed in recent weeks, but going forward, in line with the usual seasonal trends, we're going to see a bounce back. In 2020, property searches doubled after Christmas Day. So after Christmas, we're expecting a bounce in the market again. And as well as the usual seasonal pickup, we anticipate more demand will be fueled by continued reassessment of home. And that is one of the big things that has driven the property market in the UK, reassessment of home. It's a key term. And it's due to the trends that emerged during the pandemic, include households wanting more space, extra bedrooms, larger garden. That's reassessment of home. Alongside this, confirmation around the changing working patterns for those in the workforce who are in office-based employment will also continue to act as a spur for new properties. If you don't have to be in the office 5 days a week, why live in a small, cramped home when you live in a large one, potentially further out? A recent Zoopla survey showed that around a fifth of those who said they were eager to move in the coming 18 months said that new working from home arrangements were a major factor in that decision. In addition, as we've had such great equity increases, a desire to lock in property price gains is also a spur and a motivation for people to move. It is expected that the speed at which the market is moving will start to normalise next year. Average time between listing a property and agreeing a sale, subject to contract, was 50 days in the years before the pandemic. During the pandemic, that has been 30 days. So we expect that to unwind a bit and head back towards the 50. But there is such a shortage of stock and properties selling so quickly that it's going to be a very slow unwinding, we believe. The overall outlook, as we've discussed in previous market wraps, there are looming economic headwinds in 2022. Rising inflation, which will lead to higher household costs. The Bank of England last week made its first market interest rate change, which caught a lot of people on the hop, myself included. It won't affect most homeowners in the short term because they have a good deal of equity in their property. 75% of people in the UK are on fixed rate loans. But what it will affect is first time buyers and people who are trying to get in for the first time. There will definitely be, and it's in the Telegraph this week, that their headline was rising interest rates trigger fears of house price falls. And they go on to talk about being 3 interest rates increases next year and another one into 2023, which could put rates up over 1.5% to 2%. But the point is that, and this is a good quote from Zoopla, overall, even with another rate rise next year, mortgage rates will remain relatively low compared to long-term averages, and many households are further protected by the stress tests that lenders have been implementing, ensuring that their household income will withstand mortgage rates at 3% higher than their current rate. So it's already stress tested in, and that goes right back against what happened prior to the global financial crisis, when it wasn't stress tested in that way. That's why it was such a massive shock. So really the banks, even though post-financial crisis, they are very unpopular, and the government have not done a bad job here. The impact really will be on sentiment. If you start seeing interest rates going up, people's confidence could be knocked. So sentiment could be damaged. It is expected market conditions will normalise this year in terms of the speed at which the market is moving and also who is moving. So after a busy start to the year, supply pipelines will probably increase and have a chance to rebuild, so there won't be this supply shortage you've got. Even so, demand-supply imbalance is likely not to fully unwind, and as this will be one factor underpinning pricing into next year, plus that great term we used earlier on, which is reassessment of home. If you can do it on the run, why not do it on the run? If you don't have to live in a small house, don't do that. The Zoopla forecasts show a price growth expected at 3% across the board in the North, East and West Midlands, Northwest, Northeast. They're talking about higher than that, but that is brought back down by London, expecting to go up by 2%. So East Midlands and Northwest, 4% plus. Very positive. There we go. That's the wrap for the week. Very simple. There are clouds on the horizon. It's not too bad. The supply of property is still short. That needs to be assessed. So house prices will continue to appreciate in the UK, and it's still a excuse me, still a good buying opportunity. Thank you very much for listening, and hope you all have a good Christmas. Don't forget, subscribe, click the like button, press the bell to remind yourself about it all, and I'll see you again in a week. Thank you.